You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered, with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That funky tune means it's time once again for the funkiest show here on the old Options Insider Radio Network. Yes, it's time for TWIFO. This Week in Futures Options, where we do, guess what? We break down the week that was in futures options. My name is Mark Longo from the optionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. Coming at you live like we do every Friday, 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr. So if you never tuned into our live chat before, our live stream before, go ahead. Hit us up before it's done here this week. You can grab it via that Mixlr link, MIXLR. You guys know what to do. You've seen it on the old stock twits and the Twitters and the Facebooks and all the other. Now on Instagram as well. We just started that a couple of days ago too. So you can find it there as well. And of course, you can just grab that link, set it and forget it, and use it pretty much throughout the week. We use that live link all the time for this show, for volatility views, for option block, for all the good stuff out there. So if all you guys out there say, I really need it instantaneously, I don't want to wait for the podcast, there you go. We got you covered. And for all the rest out there who really love the podcast, hey, we like you too. Don't worry, we're not leaving you out too. We feature your questions and good stuff too. But once in a while, we like to give the live folks a little bit of love. And of course, however you do listen live after the fact, via the app, via the website, via the CME website, however you get the show, make sure you do send in those questions. We'd love to hear from you guys. And joining me on the old program today, my cohort, my partner in crime, the evil yin to my light side yang, none other than Mr. Nick Howard from Quick Strike. Mr. Nick, welcome back to the program, sir.
Evil? I don't know. I haven't been called that in at least an hour and a half, so that's fine.
We'll go dark side to my light side. How's that?
Okay.
Is that better? Is that better?
Doing fine. Let's see what we can do today.
I think I should say Quick Strike just with an exclamation point going. Is that good for the branding? Should we add an exclamation point? Quick Strike. How's that sound?
Well, how about this? That's funny you say that because the two eyes, when I originally did it in the whole naming and branding, the two eyes were actually exclamation points to make them quicker, right? To put emphasis on them. And then I realized that nobody liked that, so we took them off. How about that, right? There's a little
little inside baseball.
Yeah,
I like it
exactly.
though. Quick Strike. I like it. It's quick. It's a quick attack. You got to get in there and get things going. Let's get in there with the show then and get things going. We're going to start as we are wont to do in Crude land. You know, Crude's been an interesting one to watch over the past really month or so. Of course, we're still in this hurricane season. In fact, I think the next one coming up the Gulf there is Nate. So we'll see how all that is impacting things. So far, net on the week, we saw Crude giving up a bit of that ghost. We got some listener speculation about what's going on south of that 50 handle. I think later on in the show that we'll get to. Of course, we are indeed south of that 50 handle, or right around there, again, depending on where you're looking on the old term structure. It's Crude off about 2 handles or so this week. So right around 49.5, right around that 50 level. So that, of course, is a very important psychological and technical level. And, you know, it seems like whenever we rally north of that, that's when we see vol coming in. We start getting south of that, we start seeing vol coming up. And we saw a bit of that this week with a vol up pretty much across the board, a point or more. Again, once you cross that demarcation level of the 50 is when you start seeing the juice coming in. And, of course, if you see a prolonged sell-off, you see the vol increase. It's still, Crude vol still fairly anemic compared to where it was a year ago, but still a little bit more hope on the horizon for you premium buyers out there in Crude. I know you're out there. You're writing every now and then saying, what about this? What about that? So I know some of you have been waiting for a long time. I'm not saying this is it. We still need a lot more to really see a resurgence of Crude vol, but at least a little bit of green on the screen for the vol can't hurt all you premium buyers out there. A bit of a quiet week overall for net volume, only about less than 2.5% open interest increase this week. Usually some weeks we'll see 4.5%, 5%, some really aggressive weeks, 7%, maybe 8% increases out there. This week, not so much, only about 2.5% of net new flow coming in here this week. And let's get to that flow. Let's get to what was lighting it up. And it was indeed, let's see, about nearly half of the flow, almost 46% to be precise, coming in that front month. And what was breaking it down? What was leading the roost this week? Well, if you listen to this show, Crude fans out there, Crude options traders, they like some of those round numbers. And that's exactly pretty much what we saw again this week. The front month, 50 puts, taking charge, almost 24,000 contracts on the tape this week. The lion's share coming on Monday, 7,000 and change, 6,000 and change on Tuesday, slightly less throughout the rest of the week. Total, like I said, about 24,000. Interesting thing about that, 50 strikes been popular for a while. 50 puts have been popular for a while. And this week, apparently people coming in and pretty much net unched from an OI perspective. So buying, selling, closing, opening, all throughout the week. Net unch, it's very rare you see that. Only a couple hundred contracts opening net on the week. So that means a lot of froth, a lot of action back and forth on that strike, which is, again, not unexpected given that's such an important psychological level for a lot of people out there. Then we get out to, I think, a newcomer. I haven't really talked about 51s that much, but 51s, number 2 out here this week with total about 19,000 and change coming on the week. Also a net pretty much close to unched from an OI perspective, which is also a little bit interesting. The lion's share of those 51s actually coming in today, about 6,500 of those lighting up today, about 4,000 yesterday, 3,000 on Wednesday, and about 3,700 on Monday. So an interesting week for the 51s out there. And then we drop off a little bit. Actually, I skipped one. Between the 51s and the 50s should have been the 48 puts, which were number 2 actually with about 21,000 and change out there. The lion's share again coming on Monday with about 6,200. A little more open in action here, nearly 4,000 contracts net opening out there. So that's probably not unexpected as well, given the fact that we are starting to perhaps get towards those levels again of 48. We're seeing people reopening down on those strikes. Then it was the 51s, and then we drop a little bit again to the 48 half puts. So a lot of puts this week. Again, no big surprise there. 17,000 and change, the lion's share actually coming today. 5,600 of those puts on the tape so far today. Again, another kind of interesting week on the put side with a lot of net nothing on these strikes. Usually you see a lot of paper. You'll see net opening or net closing in one way or the other. Really not so much this week. Only a couple hundred contracts net opening on the 48 halves as well. So just a lot of churn on all of these put strikes, which is kind of interesting, and also the calls. That's not usually what we see out here. Then we drop off again here. Let's see. We got the 52 calls. So there were some calls playing this week as well. 14,000 of those going up, including a little more than a third, 5,000 and change going up yesterday. The rest of the week kind of evenly split. And again, about 1,000 openings, so a little bit more opening there, but interesting stuff nonetheless. Let's get a little bit farther out and see any other weird paper that may have caught our eye. And it was kind of a fairly quiet week, all things considered, from an overall options perspective. Like I mentioned, the OI not really budging too much this week. In terms of weirdness, we've got Dees 2019, if you want to go out that far. We've got the 35 puts, so someone taking it upon themselves to sling a bunch. Actually, 1,800, but only about a third of those were actually opening. So maybe someone piling in to an existing trade, or maybe someone doing some other interesting things out there. Also saw the 50 puts going up in Dees 2019. Maybe 1 by 2, 900 by 1,800. So there could be a bit of a opening thing there. Maybe I'll let Mr. Nick get into it when he gets into some of his block trades. So maybe a 50, 35, 1 by 2. That would make more sense than net just opening on the 35 puts. Again, 900 by 1,800 if that was indeed the case. Both going up on Tuesday, so maybe a little funky ratio going up out there. But other than that, we don't see a lot of even the crazy stuff that we normally would see far out, some weird 75 calls or anything like that. Kind of a bit of a, even though we saw a sell-off, a bit of a quiet week. Is that your consensus as well, Mr. Nick, or was there something leaping off the page for you over there in the crude land?
No, it's kind of boring, I think, most of the week, right? If you look at you mentioned, a good indication is the changing the open interest to see if there's any kind of new positions being established in, an increase, which is great, 2.5%, but still not a tremendous amount overall. Some individual expirations had some increases, and I think we're starting to see those individual expirations as people are starting to roll out on the term structure. But as far as anything tremendously interesting, I think, the weather, we saw the break in the crude with the new landfall of our latest hurricane. And I think that was what really gave us the push down. Other than that, I think we were hovering at or above 50 most of the time this week. And I think our push, we're down $1.40 today, which we were at 50, probably 58, between 50 and 51 most of the week after coming off just a little bit, never breaking really the highs that we talked about last week when we mentioned that it was up 52 and change. So really sort of boring. Most of our most of our increase came probably, over the last couple days in vol, and we're off today in general. So, if you look, we could probably have repeated the same thing we said last week for the quick skew anyway. No real change in the shape of the curve, so it feels like that vol curve is kind of sliding back and forth, and and it really sort of makes sense, right? If you're in a very, very tight range, there really shouldn't be an expectation for the skew or the shape of the curve to change all that much. So we're really sort of getting this sliding skew, it appears, because obviously as the futures move up and down, your 25 and 15 delta options are going to change strikes. But if the shape is not changing out much, it just sort of means that you're kind of getting called a sliding skew, where your curve moves back and forth horizontally with the futures price. So that's really what it looks like. And there's a little bit of a slope to it, right? Because we get a little bit of a vol uptick in the money, that type of thing. But nothing real exciting. I mean, some, like you said, some outliers in 35 strike. There's some 16.5s that traded out in on opening in the 60.5 strike, which is a oddball strike to begin with, and the fact that it's a half strike out in December of 2018. But other than that, quick skew looks pretty much the same as it was. And volatility a little bit up, but nothing to write home about. And still, I think how long has it been that we're talking, that we've been talking about this range in crude? I mean, we're tighter. We were 45 to 55, and now we're like 48 to 52 or 47 to 53, and we're just bouncing back and forth like a pachinko ball, right? And eventually it's going to come out and then decide where it's going to go. But right now, even when I listen to some of these videos that the exchange puts out, or some of the talking heads that are out there, and they are mentioning like OPEC re-upping their limits and that kind of thing. None of that stuff seems to be affecting the market. Right now we're in a very tight range, and until something, significantly different happens, not necessarily significant, but significantly different than what the status quo has been, I really see us we talk about here, we're 4.5% roughly change in the futures, and that caused us to have a little bit of a uptick in volatility, but nothing really to write home about when it's all said and done.
What there is to write home about, though, Mr. Nick, which people have been writing into us. I wrote in last week and I think weeks before, and I'm going to cheat a little bit again this week because we had somebody write in again. I'm going to bump it up from the listener mail now. We got Alan this week, says, I'm down for some lean hogs and livestock rundown. So, we have been talking about these a little bit, where they've been popping up in our winners and losers of the week a lot. Lean hogs in particular has kind of been moving a lot. So let's just have some fun. Let's do some live lean hogs analysis. I'm going to do it on the fly. I'm sure you are pulling up right now as we speak, Mr. Nick. So we'll do. You guys can play along as well. CMEgroup.com/Twifo. Get into the agricultural drop down. Then you'll see livestock. Select that one. And then from in there, you could choose lean hogs. And then you too can play along with Nick and I as we kind of do this live. And it was an interesting week out here. We said lean hogs has kind of been moving a lot. This week, a little bit quieter for the most part. The front contract moving quite a bit. The rest of the curve, not as much. The front contract up about 4 handles. The rest of the contract seems like a little bit of vacillation out there, but mostly net up somewhere between 2 and in the front month nearly 7% out there. So a crazy week out there again for the front portion of the hogs curve. And if we're looking at vol across the board, actually a bit of a mixed bag with a lot of, again, we won't talk front month and vol because it's all gamma anyway, but you get a little bit farther out and vol actually coming off a little bit, which kind of makes sense. I know kind of hogs have been a little bit turbulent of late, so even this move maybe not enough to withstand those vol levels they've had out there. So we're seeing about 2, almost 3 points coming off of that Dees contract in terms of vol, and about 1.5 points out there, a little bit beyond that in those contracts as well out there in Feb. So interesting stuff out here from a vol perspective. Let's see what was moving. And actually, open interest up about 5% this week, a little over 5%, increasing nearly 11,000 contracts. So been a robust time out there for lean hogs, our surprise product of the week, if you will. They certainly surprised me, but hey, it's kind of fun. All right, let's see what was lighting it up out here this week. Number one with the bullet were the OC 60. Yes, 60 puts. I should probably mention the handle where the futures are. The futures are right around that 60 handle, at least in that front contract and the OC contract, and 61 in Dees to get a little bit richer as they go beyond out there. So that 60 strike, very active, maybe analogous to the 50 handle out there in WTI right now. 60 puts, lighting it up, 5,400 of those bad boys going up, including the lion's share, 2,000 and change going up on Tuesday, 1,100 on Thursday, 1,000, almost 1,100 on Tuesday again. And net closing about 1,000 contracts there on the week. And hot on his heels were the 56 puts with 5,275 going up this week, including about 2,300 on Tuesday and 1,500 on Wednesday. Not so much to speak of today, only about 100 odd contracts. Again, that goes to speak of what we said before about hogs kind of marching to the tune of their own drummer out there. Then we go down, also pretty active, 54 puts, so kind of a put palooza out here in hogs this week. About 5,000 almost, 4,947 to be precise, including 3,200 of that coming in mega chunk there on Tuesday. The rest of the week kind of quiet. 300 net opening on the week there as well. So a lot of closing paper, or kind of just unched paper this week, was kind of the theme, and behind that were the double puts, 55 puts, so kind of all puts all the time. About 4,500 of those going up this week, including nearly 2,500 on Tuesday. About 500 of that was closing total on the week. If you want some calls, there were some. You got to dig down a little bit, including the 60 calls with about 4,100 going up this week. 2,000 on Tuesday, 1,100 on Monday. The rest kind of scattered throughout the week. That was a little more opening action there. About half of the net paper, about 2,000 contracts was opening. So a little bit more opening players on the 60 calls out there in Hogland, to use the technical term. If you want to get a little bit farther out, we go to, let's see, Feb of 2018, so a little bit out there, and we saw the 70 calls active as well, with about 1,000 of those going up throughout the week. Kind of scattered, actually, throughout the week. Good chunk, nearly 700, though, coming on Tuesday, 300 net opening on the week. So again, we're talking a little bit smaller numbers, obviously, than a WTI or something like that, but still interesting to see what's been lighting it up. You go farther out, we don't see a lot. I see 200 of the 86 calls, I think, going up in August of next year. So some weird little lots going up there as well. But interesting stuff here across the board. Nick, we don't get a lot of chance to talk hogs, or dare I say it, hog skew. Have you got anything up your sleeve for? It's been a while since we had some hog love on the show. Anything catching your eye out there in Hogland this week?
Well, first of all, gesundheit.
Well, thank you.
Because you hog skewed, so I figured, we'll throw a gesundheit in there. Very bad afternoon humor. Yeah, hog skew. Let's see. Well, what's interesting, I just pushed something out on Twitter with the 3-year, 60-day consummatory quick skew chart, and it looks like there's actually, it shifts around pretty good. And right now the December contract is around 69 days. So that's roughly close. We're going to get to the 60-day. And right now it has the puts very expensive to the calls. And if you go out there and look at that chart that we just pushed out there, you'll see that it does come back. There is a teeter-totter in terms of how that vol curve sits. So, the question from our listener, who was the listener that asked? I can't see it here. Who was the listener?
It was Alan, just the creatively named Alan.
Straight up Alan. Well, that's no fun.
It's kind of boring,
Alan.
Yeah.
Mark can't say anything about that.
Yeah, there's nothing fun there at all.
Probably some dude sitting there listening and trading at the same time, because we don't even have to gender specify or gender agnostic that one at all. Would you imagine? Right? I'd say Alan's pretty safe.
Anyway, pretty manly name, Alan.
Right, because we like to be we like to make sure that we're very we're acknowledging both sides of the coin, so to speak. In any case, it's probably a good idea to keep an eye on that hog skew. God bless you, because I think that it's moved around enough, and we're really, really wide in comparison historically. So, and again, I hate to even say anything even remotely close to pay attention to something that I don't really know that much about, but you just look at the numbers and it sort of gives an indication that there's something going on out there. So it certainly does move around when you look at that chart. So it's been wide for a pretty long time. The DC has been wide for an extended period of time. So maybe it's something to pay attention to, and we'll keep an eye on that as we go forward. So thank you, Alan, and we'll keep an eye on for you, and maybe we'll address it next week and see if we got any change in the quick skew. And I want to throw something out there real quick, Mark, while we're talking about quick skew, if that's okay.
Go for it, sir.
Since you went out of order, I'm going to go out of order a little bit.
That's what we're doing this week. We're mixing it all up.
We're going hog wild, so to speak.
Look at you with the puns. See? You're bringing your A game this week.
Except for the gesundheit, for the hog skew. God bless you. We'll see what happens. But so everybody knows, I have the links turned on for TWIFO right now out on the CME Group website. But last week we released a free version of QuickVol, which will let you see all days at all times, historical at the money volatility, historical skew, historical quick skew, historical vol curves. And that is available when you register for the absolutely free version of Quick Strike Essentials at cmegroup.com/quickstrike with no C. So take a look at that. You'll get 1 month of historical data for free as part of that free Quick Vol tool, with the ability to obviously upgrade for more historicals or purchase ad hoc queries of historical volatility curves and or other option information. So just wanted to get that out there and let everybody know they could take a look at that. Let's get some registrations and say you heard us talk about it on the Options Insider.
Yeah, go for it. Quick. I mean, how often do we talk about quick skew here, with exclamation points or without? It's still a pretty cool tool. So check it out. I mean, this is I mean, I've said it before. How many times have I said it now? It literally is unique. I've never seen any other platform. I've seen a lot of people who spit out skew, usually as one number. I don't see anybody breaking it down in its component parts, which really, when you have to analyze skew, that's how you have to do it. The calls are separate. The puts are separate. They're their own separate beasts. They get linked together, but probably shouldn't be. And so being able to look at those independently, seeing how they move in a graphical form, a little easier, because then you can look at it and say, okay, the puts are up, the calls are down, bam. Easy to know. I should do my collar, maybe I shouldn't. So that kind of stuff is invaluable. So hit them up. We'll plug it again at the end of the show where you can go for registrations. Well, Mr. Nick, I'll let you dictate our fortunes here. We got time for I think one more product before we get some listener mail, some futures options feedback. So what are you feeling? You feeling indices? You feeling metals, gold? What do you got?
Well, I think we should talk about gold just because it has gotten pretty decimated over the last couple of weeks, since we spoke about it when we had the initial run up into the mid 1300s. Now we're down at 1275 as we speak. So I think that's probably something to take a look at and, talk about that in general. So let's go with gold.
How did I know you were going to get? In fact, I pulled it up before you even said it. That's how well I know you, sir. I was like, I'm going to pull up gold because I don't think he's going to pick something else, even though he was a Eurodollars guy and he was, he likes his rates every now and then. He likes little indices every now and then. We talk indices on a lot of our other shows. So if you want that, I guess we could do some skew breakdown for the indices if you like. People like that. But let's hit some gold because gold is where kind of a lot of the skew action has been of late, and as Nick alluded to, not so much love for the gold bugs this week. Gold off another 10 handles in the futures, right around the 12.75 level out there right now. So all of you gold bugs who were super excited that we were north of 1,300 and they were loading up on 1,400 calls and the party was booming and all the love for gold was there. A little bit of that bloom coming off the rose. Again, the futures off nearly about 9% in some cases out there. So pretty substantial drubbing net on the week. Surprisingly, Vol, a bit of a mixed bag, which is kind of interesting, with a little bit coming off a little bit in the front portions of the curve, latter portions of the curve actually perking up a little bit. Again, that kind of goes back to what we were saying before about how the term structure impacts a lot of this stuff. I'll let Nick get into more when he gets into it and some of the quick skew. Patent pending out there for all that good stuff. Open interest actually slightly off this week. I mean, it was up, but not as much as we've seen in weeks past. Only up about 3.7%. We've seen much more, obviously. That's still about 35, almost 36,000 contracts. So that's still a decent amount, but perhaps not as much as you might think. Maybe some of the gold bugs are just so disgusted with this move that they decided to take their ball and go home. About 41% of the play-in coming in the front contract there, the Nove contract out there this month, so this week I should say. So interesting stuff. Not a lot still in the weeklies, about 371 in one of the contracts, 43 in the other, kind of lighting it up. So weeklies still, for whatever reason, not lighting it up out there in the big gold contracts. But the monthlies are, and let's kick it off here with 1335 calls. Interesting strike. I probably would not have picked that for my number one with the bullets here this week, given the fact that we're in this kind of pronounced sell-off here. 11,000 and change lighting those up. So pretty much taking the ball and running with it this week. Total of, like I said, 11,262. About half of that, a little more coming on Wednesday. 6,400 and change. About 4,000 on Tuesday. So that was the lion's share of that coming in those 2 days. The rest kind of scattered throughout the week. And a lot of that closing. So that would probably be my second guess after seeing that strike, would be people maybe giving up the ghost, and that seemed to be what we saw there. 6,600 of that, so over half of that closing this week. So again, some of the gold bugs maybe deciding discretion, the better part of valor, taking what little premium is left on those 1335s, closing it out and living to fight another day. Could be overriding as well and closing that out as well, but probably, given what we've seen about gold, a lot of that upside tends to be in the gold bug territory. So I probably would have wagered that was probably long. Maybe that is stereotyping on my part, but I've been around gold for a while and gold traders for a while, so I kind of know how they like to play. All right, number two, we're 15 calls. Interesting strikes. Some new strikes hitting us up this week, Nick, which is kind of interesting. About 8,500 of those, over half coming on Wednesday, about 4,700 on Wednesday. The lion's share of that again this week, also opening, which is interesting. About 6,000 of that 8,000 and change was opening, so maybe there was some rolling down as well. Maybe they were closing 1335s, rolling to 1315. Maybe would not have been my strike of choice if I had to roll, but perhaps we've seen weirder things out there in some of these products. And then we come off a little bit again. Finally, we get some puts on the tape, in particular the 12 half puts. So no meteor puts, which is kind of interesting. But it was very close, actually. It was almost a two-way tie between the 12 half and the 1260 puts. The 12 half puts doing about 6,300 contracts. The lion's share actually coming today, 1695 coming up today. So about a third going on the tape today. The rest kind of scattered throughout the week. About 1,000 of that opening total on the week. 63.57 for our number 2, so 37, excuse me. So right behind the 12 half puts with the 1260 puts. They did the lion's share today as well. 2,500 of those going up today. The rest scattered throughout the week. Again, about 700 or so net opening. So kind of net unched, but a little bit biased towards the opening. Then we go back to the calls at 1,300. That's one I would have thought would be higher on the list. I thought that might be number 1 with the bull. People like those round strikes, or maybe even the 1275s, but nope. 1,300's about nearly 5,000, about 4,800. The lion's share again coming today, 2,350 or so going up today, and about pretty much net unched on the week. A little slight bias to the opening, but not a ton to really speak of out there. There was some interesting stuff though. If this print. I don't know, Mr. Nick. Is this print legit here of these this Dees 2018 print? What is that?
The 3,000 calls.
Yes, I just noticed that on my screen.
Well, the 2,000 calls traded as well, and the 2,600 calls too, according to this. Yeah, I mean that's that. Well, it's coming through on the block. Okay, so that's what got reported on the block. So it looks like a big call ladder.
Wow.
Doesn't it?
So that's the case. Then I buried the lead, but it was so far down on the screen that I had to scroll to see it. Wow. Yeah. So this was, so a lot of the action. Actually, I take back what I said earlier. Number 1 with a bullet. Again, if this is all correct, and it looks like it is on the block side here. The Dees.
I'm going to look.
Dees 2018. You ferreted out, Mr. Nick, the keeper of the data, while I relate it to the good folks here. Burying the lead. I apologize, folks. The Dees 2018, 3,000 calls. Yes, I said that correctly. 3,000 calls. 15,000 of those printing on the blocks today, which is an interesting print. As Nick said, it looks like there may have been a bit of a ladder going up today with 7,500 of the 2,600s, 7,500 roughly, 7,650 actually, of the 2,000s. So, and then 15,000. So those would add up again for a bit of a ladder or tree, call it what you will out there, with 7,500, 7,500, 15,000 of the 3,000 calls. So I take back everything I said about the gold bugs. They're back in force out there. At least someone is. We got to parse this paper a little bit to see exactly what the heck was up. But if this is not the definition of funky, then I don't know what is. Mr. Nick, we've seen some outlandish, some funky, some downright crazy gold bug paper out there. But this might have to take the cake. Would you concur?
Here I'm tweeting it. I'm tweeting it right now. Let's see. I'm pushing it out there. I looked, and it's a buy of the 2,000s, a buy of the 3,000s, and a sell of the 2,600s. And those went up in 2 distinct. Yeah, somebody paid 3 and 3.1 for 37.50 of it. It's a call spread versus. It's a call spread plus 2 times. Wow. Yeah. Well, it's a call spread versus out of the money calls, or it's a call 1x2 versus in the money calls. So I'll go with the calls, buying the 2,000, 2,600 call spread, and then buying twice as many 3,000 calls. So I just pushed that block trade out there, and that's what got printed. And it got printed at 10:30. And interestingly, it didn't get revoked unless somebody paid 3.1 and then sold it. Paid 3.1 and then sold it for 3 flat because it was some sort of fat finger mess up, but that is actually, I don't even know what to say about that because that seems pretty bizarre, right?
That has blown my mind officially for the gold trades. I can't imagine a scenario where we're that. I mean, this is not that far away. It's Dece of next year. It's long term, but I mean, where we're talking 3,000 strike or anything even in the neighborhood of that by this time next year. That time next year, that's I think wow is about all I can say. So that's definitely, we needed a surprise trade of the week. That one certainly has surprised me. So much so that I didn't even see it at first. It was so far down there, and it seems so outlandish. It seems like a bad print, doesn't it? Because it's just so crazy.
Yeah, it's in there. I'm looking on CME Direct too. I don't see it in that list, but I mean, I get the block feed directly, and and I see two prices. I don't just see one in a wash. I see two different prices there. So both at 1035. So I don't know. The thing is, those block trades have to be put in. They either got to be called into the GCC Global Command Center, or they got to be put in through the new CME Direct platform. So those are very deliberate things that had to take place, right? I mean, you're typing in, and it could have been, it couldn't even do it what it could be. It doesn't even make sense that it could be a fat finger either. So that's pretty crazy. You know what we'll have to do? Here's what we're going to do. So tomorrow, if you're bored and you're listening, go out to the open interest tool and take a look and see how much those strikes changed, and we'll see what happens. See if there's any indication of whether those are real or not. But we'll know Monday for sure if it were real or not.
Do me a favor, one more time for our listeners. Just run down exactly which strikes they bought and sold, so we can get it out there purely, no mistakes, so they could hear it for themselves and judge for themselves accordingly.
Yeah. So it looks now again. It's how it's reported. Two trades with premium of 3.1 and 3.0, where the Dece of 2018, they bought 3,750 and of the 2,000 strike, sold the same amount of the 2,600 strike, and then bought twice as many of the 3,000 strike. So it's interesting. So it's almost,
why would you buy the 2X on the 3,000 strike?
I don't even know if, honestly, I have to see if that strike, that's the thing I have to look at. It's like, that was on the Dece. Let me just take a look at it. It begs looking at, right? I mean, we have to sort of see.
I'm almost speechless here on the show. I don't know how to really conceptualize this trade for our listeners. It is so outlandish.
If gold hits 3,000, I think we all have a little bit of things.
There's other things about going on. Rocket Man has gone crazy. So you're buying one, you're selling one, you're doing that one by one, and then you're adding a crazy 2X kicker on the 3,000 strike for.
Well, you know what? Here it is. 3,000 strike is out there. It exists. The 2,600 strike is out there, and the 2,000 strike is out there, and they're all. The 2,000 strike has a 3 delta. The 2,600 strike has a 1 delta, and the 3,000 strike has a 1 delta, and they have premiums on them. So, I mean, it's crazy, man. That's pretty darn crazy. I just don't even, like you said, I don't even know. Like, those probably don't even show up on most people's sheets.
The way he structured it, he sounds like he's almost concerned about blowing past the 3,000 strike. That's why he did 2X on that final leg there, just in case. You got to have 2X there. Like I said, it's very rare that a trade would leave me speechless or close to it. This one has all the makings of just crazy town. Listeners, you got to write in with us what you think on this one. Why would you do it? Why would someone print this? What would a scenario be? Concoct one for us where this trade actually pays off. Remember, he's getting long the 2,000s. He's pretty much buying the 2,000, 2,600 spread 1-to-1, 7,500 times, I believe. And then for fun, adding on 2X, 15,000 of the 3,000s. So, I mean, this thing makes money if it blows to that short strike, and then if it blows beyond again to 3,000, he starts making money even more. So, yeah, this thing would need... This might be like a disaster prepper type trade here going up,
it's crazy.
But someone who's got access to a lot of capital, but is a doomsday prepper.
Just so you know, there's like almost 1,400 open interest in the 2,000 call, and about 550 of the 2600 call. So that trade happened.
Yeah, I was trying to dig for some info on it, and got a little pop up there. So I apologize for that, listeners. But wow, that's yeah. I think let's just go to listener questions because I need a moment to catch my thoughts here. So let's do it. Now it's time for your feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/The Options Insider, stocktwits.com/Options Insider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
I don't know, Nick. Sometimes we like to talk about, trades of the year and crazy weird ones, all that kind of stuff at the end of the year. We may have a runaway leader for crazy trade of the year. What do you think?
Yeah, that one's kind of odd. I'm gonna make sure I get up and pay attention to the open interest tomorrow morning because it's going to be interesting to see what's there. But that happened. I mean, it's there and reported, and it didn't get X'd out. So the funny thing is I don't see it on direct. So I'm going to check. Why keep going with your questions? I'm going to check one more place to make sure.
Yeah, it has a feel like it was like a weird error. I expected that to get busted or something like that. It just seems so outlandish. All right, let's go to if that is indeed that holds. That's certainly my candidate for crazy trade of the year, or maybe that or that crazy VIX three-way, but 2 million contracts. But we'll talk about that on another show. Let's see your questions. GNDLF, that's a mouthful, asks. Here's an interesting one, Mr. Nick. Which product has the craziest skew with juiciest puts or calls? Maybe both. So he's asking multiple questions within one. He wants to know what are the juiciest calls, what are the juiciest puts, and then maybe what has both. So a nice aggressive smile to it. Well, we talked before about the metals, and this trade is certainly going to skew, pun intended, the long-term vol skew in far out of the money in some of the long-term gold. But that notwithstanding, we've talked before about the metals tend to exhibit a lot of volatility in their skew, particularly on the call wing. It's always moving up and down. So I probably would lean somewhere in the metals. I have to have a chance. Maybe, I don't know, Mr. Nick can speak to if they have like a skew scanning tool across products, which you can tell you, hey, these are the richest calls, these are the richest puts. So I'm sure probably he can speak to that if they have that. That might be a good way to go to find the literal answer to this question. But I have to lean for the one that, craziest is a subjective term too. That can mean moves the most, could be the richest. I'm going to use it more than moves the most, in which case I definitely have to go in the metals. Has been gold a little bit, this week notwithstanding, a little bit tamer of late. So maybe some of the other metals have been exhibiting some of that as well. I'll have to look and see how silver is holding up in others. Would you lean probably towards the metals, Mr. Nick? Or would it, if you talk like juicy in one direction, then maybe some of the ags and things that have, huge biases in one direction all the time, maybe that's the way to go too. So I guess there's a bunch of different ways you can interpret this question. I guess maybe first off, do you guys have some sort of like scanner that could compare skew like that? And then B, what are your thoughts on the answer for Mr. GNDLF?
I'm sorry, of you of all people, you're saying it's Gandalf, isn't it supposed to be Gandalf?
That would be cool. Okay, let's call him Gandalf. Why not? That would be really fun.
So of you of all people, like I'm not a Hobbit guy or any of that kind of stuff or whatever. But I know it's Gandalf, so I'm figuring that's who that is.
Well, I'll go for that then. I like myself a little wizard action.
Yes, right. So I just tweeted our quick skew benchmark summary, and what that does, it's giving a look at the current 25 delta quick skew numbers across all of the benchmark products, and then it gives you 1 week through 12-month averages, and then it also in the current column it highlights what in each product what is whether that call or put is rich, it's the richest and or cheapest level. So first off, you can go take a look at that. And maybe, Mark, you want to retweet that one so people can see it who are just following you and not me. And And then if I go ahead and just look at that purely from a number standpoint, I mean, from a 30-day standpoint, nothing is too tremendously out of whack. And the metals, nothing looks too crazy. The live cattle and the lean hogs, those at this point are around or near their highs for the year. Specifically, live cattle has a high skew in the put and a low skew in the call. But if you look at the lean hogs and the feeder cattle, they're not colored, meaning they're not at the highs or the lows. But when you take a look at them across the board, just from an average standpoint, they're pretty much near the highs and the lows, just from an absolute number standpoint. So the cattle would be one answer. And if you look also over the course of the last year as well, the crude oil is also in that boat. And then, of course, always our index friends, right? So take a look at that report and see if you have any questions around that, or and that one is part of Quick Vol. It's not in the free version, but it is available in the upgraded versions and in Quick Strike itself. So, and that's the 30-day, right? That's the 30-day constant maturity. If I go out there and look at the 60-day constant maturity, which is what we were talking about when we were looking at the lean hogs, definitely all of the livestock, all of the puts are as expensive as they've been over the last year. Okay, that's the report only runs over the last year, and then WTI puts are definitely as expensive as they've been. The calls are as cheap as they've been. So take a look at the report and see what you think. But this should give you Mark, I don't know if you're seeing it or not, but
yeah, I'm looking at it right now. I'm digesting it as we speak. There's a lot of good data points on here, and you're right. The puts and the hogs are juicy. The metals are juicy, but not quite as juicy as they have been. They've been up much higher. That's something what we said about gold. Gold has kind of eased off its crazy levels and from terms of call skew of late, but it has been out there. Eurodollar is always crazy. So that one's kind of crazy on
those don't count
any
really.
given day. Yeah, exactly. But you're right. Even the E-minis are looking maybe a little bit not quite as rich, but not bad either. So interesting stuff here. Yeah, we retweeted this. You guys, if you're following us, you should definitely take a look at this, because this kind of breaks down this question from Gandalf the Wizard. I like that. He wants the skew wizard. We got a visit from the skew wizard this week, Mr. Nick. I like that. But yeah, check this out. We'll put this data. I'll also probably pull it in the show notes for you, and you guys can play along. If you have the upgraded version of Quick Strike, you can generate this report for yourselves. It goes out 1 week, 1 month, 2 months, all the way out to a year. And you could kind of see kind of the average of these, 25 delta put, 25 delta call, 50 delta net risk reversal across all these different products across all that time frame. It's kind of it's engrossing. I'm just staring at this chart, so I should pull myself away so I can answer some more of your questions. But check it out if you haven't done so. It's pretty interesting stuff. Speaking of skew, IML wants to know. He wants to know skew, and he's talking about WTI now. He says, could the put skew in WTI potentially be due to, I think he means electric here, electric car makers scrambling to hedge their primary risk? He says if WTI drops below 50, it really hurts the sales pitch for electric cars. Thoughts? And this is funny. It's like the second time I've heard this conspiracy theory in like the past week that electric car makers are really loading up on downside and crude, because if we start retracing those earlier levels into the mid to low 40s or even the 30s in crude and WTI, then you're right. The sales pitch for a Tesla or GM's new electric cars or whatever your poison is from an electric car perspective does certainly hurt. I mean, look at all this car sales over the last couple of years. It's been all SUVs because gas has been so cheap and because crude has been so cheap. So that narrative could maybe shift a little bit. That said, do I think that is? No, I don't think it's all the Teslas and the GMs and others just loading up on puts just in case the worst comes to pass out there. There's a lot of institutional producers and others that play out there that really tend to shape the skew in WTI. I don't think there's enough. I don't think there's enough electric car hedgers to really drive up the put skew in WTI. I don't know. What do you say, Mr. Nick? You think it's Tesla out there buying up all the puts?
Well, at first I thought it said eclectic car makers, so I was not really sure.
Yes, so fancy old school.
Old school.
Your Model T. How do you get your Model T guys hedging?
Yeah, and I was thinking, well, yeah, because I don't know about that. What I've noticed, I try to, since we've been doing the show, I definitely try to pay attention more to both the cause and effect of the price of oil. And from what I've seen, the gas pumps, they don't go down as often as they go up, even when the crude goes up. So I don't know that I don't think that there's any worry from that side. We're still paying plenty per gallon, especially if you need premium in your car. It's even higher than it's been in a long time. So I don't necessarily think that the electric guys are scrambling so much. I think eventually they're gonna be scrambling to just sort of be able to match the distance traveled for from the gas cars to the battery cars. I think that's what the scramble is going to be from a battery technology standpoint. But I think you're going to continue to see people buy those who want to be sort of bleeding edge, leading edge, eco-friendly, suburban forward car buyers. So I don't think that that's where all the downside's coming. I think that we've seen that before.
Yeah, all electric car makers, this is not enough paper. Even if they are, they're buying to really move the skew. Now, the eclectic car makers, those guys trade size, Nick. And those guys are moving skews. They got to hedge their Model T somehow.
I see them in Lombard every week over in the car show. So that's for sure the case.
Maybe we should have read this as eclectic. It would have been a different question entirely. I like that, though. All right, here's the one from Mike T. He's asking, or maybe Mick T, I don't know. He's asking, where do I get all this CME research? I'm assuming he's alluding to, we had Eric and Blue on in the past. They're always talking about their research reports that they do over there at CME Group. Those guys are the head of the research team. Most recently, Eric was on here talking about some of his Fed-related and inflation-related research. He's also done a lot about the structural drivers of the costs of crude and the production and all that good stuff. It's pretty easy to get, actually. In fact, just as we were talking, just to test it myself, I just pulled up cmegroup.com, which is where you should go. And then right there on the homepage, front and center, it says economic research. And there's highlights to the options market's complacency ahead of La Nina. That's from our buddy Eric. We have this is the report we had on recently on the show. What could fire up America's anemic reflation? Also, the Fed takes lead in the quantitative easing. All this research reports here. There's also a big link to view all economic research. And if you click on that, if you want actually the category to find this, it's cmegroup.com/education. So go to the education tab and then click on the economic research tab there. So if you want to navigate yourself, maybe for some reason they changed the homepage around, click on the education tab there and you'll find all of this good research there. I don't know, you got anything to add there, Mr. Nick, or is that where you go as well?
No, I tweeted out the link when you had started talking about it. So if you're looking at our feed, it just says read economic research reports at the CME Group. Like Mark said, there's a big link on the homepage, and that'll take you right to all the different categories. So nothing to add there, except if you can get your fill of Blue and Eric, you might as well, because they're very good and they're fun to listen to those guys.
Yeah, when they're not out there doing their own show, those guys, competing with us here on Twifo. Who do they think they are? Yeah, check it out. I think it's called Off the Charts, their show. It's a fun little show they do, talking about their data. All right, let's see. Let's wrap it up on a fun one, Nick, because I'm still kind of digesting that crazy crude trade or gold trade. Let's go here. You got to do Bitcoin, right? Let's wrap it up here with NN78. Interesting handles this week. They ask, if they did list Bitcoin options, how do you think the skew would look? That's an interesting question. I haven't looked at Bitcoin recently, but I know the more recent comments from Jamie Dimon and others really crushed it. So I'd have to imagine it'd be a pretty aggressive skew to the puts, because that's the one thing you can't really do out there in Bitcoin right now, which is hedge that thing. So I got to imagine it would look pretty put heavy. Maybe, shape-wise, it'd be steeper, obviously, because the puts would be richer, a lot richer. But probably something, I think, analogous to what we see in the large index product, where the calls have less volatility, the puts have more. And then it'd just be a question of slope. I think the puts right now would be super bid. That may come off if if Bitcoin gets another heavy rally behind it. They might see the puts lessen up. But I think it probably would be, I have to imagine, a predominance of interest out there in just hedging these positions, because right now you're kind of limited in how you can liquidate these things. So there's not a lot of bids to even hit if you want to dump these things. So puts, I think, would be pretty juicy. Would you concur there, Mr. Nick? You taking the other side? I think people want to really load up on calls, speculate on the upside.
Well, ironically, since we're going to start looking at this stuff in Quick Strike, we've been doing some work in that area. So I have an actual answer.
Oh, you're cheating. Right? You have data. That's no fun.
I have data.
That's no fun.
Because the users have been asking, right? So we have been trying to accommodate. So first off, if you look at the return of Bitcoin, it distributes normally like if you look at the return of the SPX and the S&P, it distributes kind of the log. When there's an even amount on the left and the even amount on the right, it's got some fat tails on the puts and some fat tails on the calls, but the price points actually they fit into a sort of a normal distribution in terms of where they lie. So and then when we built out the skew, and this is with the help of John Nelson, we were doing this. We built out the skew. It looked like a pretty even smile. Again. Where there was at the money was lower than the wings, and the wings got progressively higher on both sides. Now
that's surprising.
You might say, well, that's a surprise. But if you do that same thing and you build it out with the SPX numbers, the skew looks like that as well. It's not necessarily how the market trades, because we know that there's a put bid and a call offer in that SPX. But when you look at it purely from the implied volatilities as you go out on the price distribution, it looks like a smile. Now, I have my own opinion based on what you just said, and I tend to agree with what you said, because the guys that I know that trade the cryptocurrencies, they tend to buy it to sell it. Okay, they're not holding it, right? So I'm thinking, or at least the thinking I've been doing, I feel like it's going to trade like a stock or an index where people will be long, but then they'll sell calls to kind of finance some of that purchase, and then be glad to sell it if it gets to a certain point, right? So, it'd be some of that covered trade, which would make some of the call volatility be offered a little bit. Now with that, and then you would probably hedge your downside as you rally by buying puts, right, which would force that skew up. At the same time, though, I'm sure that there's people who are going to just buy the calls and say, I think this thing's going to keep going up, right? So that might counterbalance some of the offer that you see in the skews from the people trying to sell to capture some of that premium on the cover trade. So I think, again, if just from talking about it and us looking at it of late, I feel like there's a put skew. And I feel like it's going to trade like an index or look like an index curve, but at the same time, I don't think there'll be as much offered on the upside, because I still think you're going to see speculators in there on the purchasing of the calls to say, I think we're going higher. How's that? Is that okay?
That's good. That's kind of the one wild card I was kind of wrestling with myself, which is, I think empirically it should look like an index, but you got the zealots out there. We've seen them in Apple, we've seen them in gold today. They're out there and they love this stuff, and they could bid up that call wing. So that's the only kind of wild card question mark I have about Bitcoin, is how many of those guys are out there, and will they materially bid up that skew? Or I still think it's going to net lean like an index, but that's a question. That's interesting. That's something, now that Nick has some of the data, we're starting to see maybe the answers materialize for that. And hopefully once these things start trading, then we could see it all for ourselves. All right, listeners, that music means we come to the end of a very special episode of Twifo. A lot of crazy stuff popping off this week. We went lean hogs, we got gold craziness, we got Bitcoin skew. I mean, we covered it all, Nick. Listeners cannot be disappointed with this show. What do you think?
No, it was a good little run for kind of coming in there not knowing what we're going to cover. So no, it was a fun one. I saw one question I wanted to get in there. We'll have to make sure we talk to
is that the collars?
Patrick Rooney's question about the hedging and strategy.
Okay, yeah, we can get to that next week.
We get to them next week, right? So stay tuned if you are out there, because I think I know which Patrick Rooney that is. Because there can't be only one Patrick Rooney, right? There's
probably not.
There's probably a lot of Patrick Rooneys out there, but no, it was a good one today. Yeah, and everybody, if you're listening, besides my wife and kids who I make listen every week, anybody else who's out there, take a look at some of those tweets, because there's some good reports out there for that in response to the questions that you asked. So I'd like to get some feedback on. If you'd like to see that on a regular basis, or if you have any suggestions for how that might look.
And you mentioned at the top of the show where they can get that quick skew stuff. Tell them where they can get that again, so they can get access to it and kick the tires.
Right. So finally, it's out there. You know, you've heard of Quick Strike Essentials. That's our free tools that's available on the CME Group website. There's also a set of tools that are integrated into the site itself. But as part of Essentials, we've included now a free version of Quick Vol, which has 30 days of historical data for all the different active expirations, historical expirations, consummatories, and volatility cones. So it's out there, and you can take a look, and it gives you a little taste of what's available in the more complete versions, and it also gives you a link to a sample download. So if you're looking for data to do your own analysis, that's also available from an ad hoc query and purchase standpoint. And then Quick File will be available as an embedded tool pretty soon on the site as well. So you'll have multiple ways to take a look at that stuff and to at least get a little bit of a taste of the historical data. So we hope that you will register and take a look at that. And if you do register, please say you heard about us talking on Options Insider. And, you know, we'd love the feedback because that's really the first time it's been out to such a wide audience.
There you go. New stuff all the time from the team at Quick Strike. This time, I think, right up your alley, listeners, which is breaking down that skew. You guys love that skew, that quick skew. So unique to those guys over there at Quick Strike. So kick the tires on it and light the fires if you are so inclined. And while you're off there doing that, make sure you visit our friends over there at CME Group as well. You know where to find them, cmegroup.com. Let's say, for example, our listener today, I'm blanking on his name. Let's just call him George. He wanted to know about the research. You can find it there at cmegroup.com. Go to the education tab for that. And, of course, while you're there, go to cmegroup.com/TWIFO. TWIFO. You can see all the reports that Nick and I talk about throughout the show. So if you haven't registered for Quick Strike yet, which shame on you, because the Essentials, like you mentioned, is free. Shame on you. Go register for that. You can see the stuff for yourself, cmegroup.com/TWIFO. Then go ahead and register for the Essentials. Start getting all this good stuff they're putting out there. Maybe you want to upgrade to get the skew as well. Do so. Go forth and prosper. It literally is the only place you can see that data. So if you're trading this stuff, including the indices, you want to have access. And who knows, someday down the road, Bitcoin as well. You want to have access. Go over there and get it now. And on behalf of Mr. Nick and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing, for sending in such great questions, taking us off on so many great tangents this week. We love it. Keep them coming. And we'll see you next week for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.